It seems the Grinch may have stolen our dear Peter Hug, but has he replaced him with a merrier Santa Pete, bringing good news for gold perhaps? Santa Pete joins us now. Thanks so much for being with us, Peter.
You're welcome, Danielle. You're the only one that I would wear this for, just so you know.
With gold prices wavering near that 5-month low, Peter, doesn't seem like there could be a Santa rally, but could there be a holiday miracle?
Well, I think there might still be some tax loss selling coming into the year end. We were looking for 1237 to hold last week. We suggested a breakthrough there would get it into the low 1220s, which we saw this morning. I think the market's oversold. I think the market is selling off on the belief that the Fed may taper next week. Again, I'm definitely not in that camp. So I'm looking for a bounce here, but as I wrote this morning in my commentary, it's like trying to catch a falling knife. It's a little dangerous, considering I think that there's still more tax loss selling that could occur between now and the end of the year. But I'm starting to like the market at these levels.
So in overnight news, Peter, we saw the yuan passing the euro as the second most used finance currency. The next question on people's mind is, could it eventually overtake the dollar? Do you have thoughts on this?
Well, I've heard the stories. When you go to the conferences, some of the speakers suggest that the dollar will not be a reserve currency, and most of them are obviously sellers of precious metals, and so they have their argument that gold is going to go to $5,000 an ounce. I'm certainly not in that camp within the next foreseeable future. Certainly not the euro, nor the yuan, in my opinion, is positioned to replace the dollar as the world's reserve currency, in my opinion, for at least years to come, at least not in my lifetime.
Peter, you mentioned conferences, and last week we were together in San Francisco for the Metals and Minerals show. What sentiment did you walk away with? Well,
it was a pretty doom and gloom type of conference. That conference generally, about 2 years ago, had an audience participation of somewhere in the neighborhood of about 2,000 participants. This year, I didn't take a specific head count, but my feel from the primary auditorium where the keynote speakers were and where we gave a panel on gold, I don't think there were more than 200 or 300 people in attendance at this conference. The exhibitors also dropped, looked to me, about 50% from last year's participation. So there was a lot of just dismay in the market and a lot of disappointment in the market. That, to me, though, sometimes indicates a contrarian signal. When the markets were at their highs, that's when you would expect, the conferences to have, 2,000-3,000 attendees. That generally indicates a top. When you have this type of largesse in the market and everybody's basically throwing in the towel, suggests to me that we're getting much closer to the bottom than most people realize.
Peter, you're right that attendance has been lower at the shows in 2013 all around. Would you say that it's just the serious investors in commodities that are left?
Well, I think they're trying to figure out what's happening here, and when you analyze the fundamentals, government debt, the monetization of that debt, the continuous liquidity being provided to the market by the Fed, which I again don't think is going to end their program probably until March, where they will begin possibly to taper, but I don't see an interest rate hike in the U.S. until 2015. You have the Eurozone continuing to be accommodative, and the Japanese this morning announced a $55 billion monetary expansion. So, the fundamentals are still very positive for the metals. And, the European Union situation, the economic situation there is by no means behind us. So that, there's a lot of reason to believe that this market is oversold and, could surprise us on the upside in 2014.
Okay, Peter, let's get back to numbers now. What key levels are you looking at for gold?
Well, the level, obviously I'm looking for 1180 to hold, which would be the double bottom. And I do not expect that market, that level to be breached for the balance of this year. I'm actually looking to sort of take long positions with tight stops on any further weakness here. I think this market is oversold. The caveat being that there could still be some considerable tax loss selling coming into the the final couple of weeks, as people take their capital losses on their commodity portfolios against capital gains on their equity portfolios. So that could add some supply to a market that is going to be very thin in about 10 days from now. About mid-December, this market tends to dry up totally, and there are potentially some extreme moves that happened in the last couple of weeks of December, primarily because of thin markets.
All right, Peter, and with the final minutes we have left, any thoughts on silver?
Yeah, silver is indicating to me that from what we've been saying over the past few months, that the governments are fighting deflation, and silver being down along with copper indicates that the struggle with the global central banks is one of fighting deflation. So they're going to continue to monetize, but silver is reflecting that deflationary fear. And if my call is right on gold, that I think 1180 will not be breached. I think silver is oversold on a ratio basis. We're almost at 64 ounces of silver to an ounce of gold. So silver, 1875, 19 range here, I'd be tempted to go long.
On that note, Peter, thanks so much, and I'm sure we'll be seeing Santa Pete again next week. Thanks for getting into the holiday spirit.
I'm the only guy that would wear this, and it's only because of Daniela that I'm wearing this funny thing on my head. So just so the audience knows, this was not my idea.
And here I was thinking it was part of your contract, Peter. Thanks again, and thanks for watching this edition of For Pete's Sake, featuring Santa Pete. You can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Camboni. Thanks for watching.